And good morning, good morning, good morning. We are broadcasting live officially. Hello to everybody. Happy 29th of December. We have only two short days to go, and then it's all over for 2020. Brand new year begins, and who the hey knows what it's going to bring to us. Personally, I am kind of excited about it. I don't know what you have in plans for the 31st, but I am going to a concert. That's right, in my PJs. I've actually opted out to go for a first ever, at least for me, first ever all virtual concert with the whole 3D VR kind of stuff. Actually, kind of excited. Doing it mostly for research purposes. I have no clue who the artists are. I have no clue what kind of music I'm going to be into, but I'm going to a concert and I'm excited. I'm excited. So we'll see how that's going to play out. Today, we have incredibly exciting and news that I think, I don't know if they're exciting, but they're very important news that we have to discuss. And that is the governments. The governments are stepping in and basically destroying the business, destroying the wealth, destroying everything on their path. And I will share with you how we have seen that happening. Now, I know a lot of folks are talking about, with the Fed, for example, or the European Central Bank and stuff, printing a ton of money and in that regard really destroying the economy, where of course we do know that vast majority of wealth goes to those that are closest to the central bankers, right? By the proximity and engagement and knowledge and sort of the whole like network effect of like, right, like who you're close to, that's kind of what you benefit from. But there's additional components that I think would behoove us to understand of what they're doing and how they're doing it. And we're going to be discussing that exactly today of what the countries are actually doing and how they are destroying their own businesses, their own wealth, their own people, and of course, people not always understanding what the hey is going on. And sometimes, of course, giving just power to these organizations and agencies without the ability to vote at all. We do see things roll out just out there easily, and then next thing you know is people suffer. But of course, you don't notice the suffering right away in the moment. It comes months, years, sometimes even decades later. And we're going to be discussing that today in today's show. If you're brand new to the whole thing, hey, do subscribe, hit notification buttons, and let's do this. All right, y'all. Good morning, good morning, good morning. Welcome. Super excited that you are here. Hopefully, you're just as excited as I am to be here. So, of course, we did talk about the fact that there is some big moves within the government regulations and kind of what's going on. So, first thing that I actually want to go into is take a look at on the traditional market, we're seeing something very interesting happening in China. As you might be aware, China is going after some of their big tech, going after their antitrust, very similar to what we're seeing happening right now in the United States with Google and Facebook and stuff. And they're going after Jack Ma's companies. And what we're seeing is we're seeing the global investors are fleeing from these companies because of what's going on. So, of course, what's going on? Well, the global investors are running from Chinese tech stocks in the wake of the government's crackdown on Ant Group and Alibaba. As you know, Jack Ma has been having all kinds of challenges with that stuff. Alibaba, a few years back, kind of had to give up their reins in many ways and sort of succumb to the Chinese government. And now they're after Ant Group saying, you're making too much money. You're too liberal. We don't like it. We don't like it. You got to scale back, scale down. We're not going to support this kind of stuff. And of course, what's happening is that investors are saying, forget this, man. I don't want to get into this stuff. Now, of course, there's a big tension between Chinese tech giants and country's Communist Party. And of course, the investors are saying, I don't know that I want to play within this part. Now, some of the tech giants, of course, are being tackled everywhere, right? China is one of them, and you might be saying, well, of course, Nev, but that's China. They're communist. Well, it's happening in the U.S. Is U.S. communist? I don't know. It depends on who you ask. Some people will say absolutely not. Some people say no, it's not communist, it's more fascist. Some people will say it's not fascist or communist. We are very democratic. So I don't know. You, of course, can form your own opinions. What I am saying is that we're seeing some similarities within things, and you can describe it however you want. One way that I describe it is that the governments are stepping in and really trying to regulate the business and the money because they're desperate. Why are they desperate? Well, because right, what is one of the things that they are needing? They need money. They need wealth. They need money. And so, how do they get that? Well, they get that through taxation and through different sources of wealth, right? So, what's going on? Well, let's go in. And if you're saying, well, this is just China and US, what other evidence do you have? Well, let's switch over to India. India is considering 18% gross tax on Bitcoin transactions. So what's going on? Well, Central Economic Intelligence Bureau, an arm of the Finance Ministry, has proposed imposing an 18% goods and service tax on Bitcoin transactions. And of course, this is the Finance Ministry think tank, and they're saying, hey, the government could gain, almost $1 billion annually by taxing the Bitcoin trading. What they fail to realize is the same thing that the governments fail to realize all over the place, is that when you do something like that, you are doing effectively two things. Those that are really wealthy, that do a lot of potential trading and that kind of stuff, have also an ability to leave the country. So they leave. Capital always goes to the places where it's treated the best. So it leaves there, right? So that's number one. Number two are people who are saying, well, I can't leave, but I also don't believe in it. They go underground. That's when we start seeing illegal activities starting to occur. Now, of course, when you see that happen, what happens next? Well, they're saying, well, now it's being illegal. I have to step in, and now we have to have more funding to drive over this illegal activities. So, in every way that you look at it, they're looking for ways of how do we make money and make, instead of going in and saying, how do we support businesses and enterprises and how do we make money to really lift up everybody, they're basically putting themselves, it's like us versus you. And we're going to tax you, and we're going to penalize you, and we're going to drive out good business, good people, productive business, productive people, and we're going to create basically crap. Now, not everything that stays is crap. Unfortunately, things that stay are things that really can't afford to go, or for whatever sentimental reasons choose to stay. And that's when we really start seeing all kinds of suffering. We're seeing that right now in the US, for example. Of course, we're seeing suffering from individuals that are struggling financially, right? But we're also seeing it, in a ways where people are really creating revolutions. They are standing up. They're blowing things up. They're burning things. They're destroying stuff. And this is one of those things that it's coming because of what the government is doing. Now, what are they doing as a response in some of the places like United States? We just got that whole, like, is it $600, $2,000? Who the hey knows? They're going to be printing more money, and they're going to be printing more money altogether. And it sounds, again, really lovely at the moment when you receive the funds, right? And again, they are sort of doomed. Do it and you are doomed. Don't do it and you are doomed. So it's sort of the rock and a hard place that they find themselves. But the challenge, the problem is that while they're printing the money today, it goes over to the people. People haven't been taught what to do with money, what money is, how it's being created. So they do silly stuff with the money. And of course, it's really meant to stimulate the economy, because they know if they give $2,000 to a regular Joe Schmo is going to go buy seventh TV, like he needs one, so that when he's on toilet, he doesn't have to crook his head slightly to the left to be able to see it. Now he can have one in front of him, and then have one in front of the sink, and have one in the bath, and have one in the kitchen, right? So people do silly things with money, and then when money runs out, they want the governments to kind of step in and save them. And so when they end up printing all of this money, of course, the value of the money goes down. But where do we see that? Well, we see it in the price of the assets that are going up. If you take a look, of course, you do know that if you take a look into what's going on within the economy, you have easily noticed and realized that really it's the assets that have gone up in value. Stocks, bondholders, bonds are, we're going to take a look at stuff. I mean, bond prices have been going up. And so, of course, what bond users do is they basically will buy it. When the rates go down, they basically sell that one and get cash out. And so they've been doing basically bond trading to keep up, and they've been keeping up really well. Now we're hitting that close to zero, which actually we're closer to 1% on a 10-year right now than we're to zero. But eventually it's going to have to continue going down. They're going to have to print money. They're going to have to keep on supporting things, and they're going to have to keep on taxing us. So we've seen how governments in U.S., we just talked about it, are basically having hard time with what's happening with the technologies and printing money and all of that stuff. And of course, they're going to tax the crud out of all of us, right? Everything you have, they're going to figure out the way to tax it. So that's one. We've gone to China, right? Two totally different systems or regimes, arguably speaking. We've gone into India to see the same thing. Now it's time to go into Israel. Well, Israel is also saying, hey, we're going to tax it. They're figuring out all kinds of different ways to tax it. And they're saying, well, all cryptocurrency owners, you got to disclose your holdings for taxation purposes. Israel Tax Authority, ITA, has reportedly sent notifications to dozens of Israelis who own digital currencies, asking them to fully disclose their assets and be taxed accordingly. Now, of course, they're struggling because they don't always understand it. However, please note one thing. The governments, they can print their own money ad nauseum, right? Which means that they can pay this funny money to people. I don't know, some of the people are calling cryptocurrencies funny money, but I assure you, fiat is funnier than cryptos. At least the cryptos, a lot of them are decentralized, a lot of them are capped, a lot of them are running on the different networks, and they have people that are willing to fight to death to preserve it. And fiats do the same thing. The only difference is they have slightly bigger armies, right? Maybe not as much intelligence, but they can print at nauseum. And so what ends up happening is that Israel has engaged into data sharing. There are reports and notifications that are being basically sent to individuals, but at the same time, the ITA is looking for information and getting it from the Europe-based funds and accounts held by Israelis. So they're following the US-based model that, hey, as long as you are our citizen, we will tax you as much as we possibly can. So this is one of those things that it's very interesting to kind of pay attention to and be very, very cognizant of. Now, it's not all bad. There is a municipality in Spain that is trying to do something a bit different. As you know, Spain has been struggling quite a bit financially within the Europe. Of course, we do know that some of the less strong or weaker, I guess would be the correct term, weaker economies within the European Union, European bloc, have been struggling quite a bit with the whole what's been going on. We've seen that happen in a big way over with Greece back in 2008, a financial fiasco, let's call it that. It was a giant fiasco. And of course, we've seen that happen over there. We've seen Italy struggle. We've seen Spain struggle. We've seen in Spain over the last, year or so that they were trying to figure out, like, how do we separate and create, we wanted to be a different municipality. And it was a big thing, like even early in the 2020. I'm sure it's still a big thing, except right now we're just all focused to talk about COVID-19, right? So that's where all of the words are. It's been created. How many it's killed? What's going on with the vaccines? Are the vaccines a must? A must not do? Right? So we're focused on all of that stuff. And there's a lot of things under all of those layers that are occurring at the moment. So I think it's very important for us to pay attention to that stuff. So right now we do have a Spanish municipality that is creating its own cryptocurrency to boost economy, which is hurt by coronavirus crisis. So Sevilla's municipality launches Elio or Elio cryptocurrency to boost local economy. A crypto asset which is pegged to euro price, which will act as a tunnel to send economic aid to stimulate local consumption between 50 and 200 euros to each one of the 593 selected beneficiaries. So it's basically a stable coin that they have created that is for their own local economy. And they're saying, look, we're just going to go in, we're going to send it to everybody out there. We're going to send it to our local companies as well. 393 of those will receive €400 economic aid worth in Elio or Elio. I think it would be Elio. If it's Spanish, it's Elio. Before the end of the year. Elio's creation would guarantee that economic aid invests directly in local businesses. And of course, all you need is just a mobile app that you can get from Google Play Store, from Apple Store, and they basically end up sending you the money that is going to run within a local economy. Now, this may sound like a crazy thing, but we've seen it before in some of the other places, even here in the US. I remember back like 5, 10 years ago, there would be all these local municipalities and local neighborhoods that created their own currencies. It would be like paper notes or wooden chips and coins and that kind of stuff that you could use really to exchange with one another within a local environment. So they were basically saying, we don't want our money to go outside because we're suffering. We want to keep our money within. So they created their own local currency that they can trade in. And I know you were like, well, it's a wooden token. Like, why would I accept it? Well, if the wooden token you would accept today to sell your cup of coffee, and then you can take that wooden token over and transfer it to, you go to the local pizza place and you can order yourself a beer and transfer the same token. That token has value, right? That's how value is created. That you accepted, somebody else accepted, and it's kind of like an equal exchange that you can make some sense with. Well, this is really what they're doing right now in Seville. They're creating their own local currency, but they're using digital technology to make it happen. So they created their own cryptocurrency, which I think is pretty darn awesome. So he's saying that so far over 165 merchants accept Ilio as a payment method. And of course, they're saying, hey, if you want to join, you can still do it at any time. We'd love to have you. And, please do know that one Elio is equal to €1. There's no difference in whatsoever, and you can just use it. Personally, I think that this is really exciting, and I think we're going to see more and more of this stuff happen and occur as we get into the economy kind of continues as we get into 2021. I know a lot of talk has been about the CBDCs, and I think those are coming as well. What I think is even more important is the fact that we're going to see this happen on a smaller scale before we start seeing on a larger scale. And once they start entering into this crypto space, I believe that they're going to go and start acquiring Bitcoin, for example, as their treasuries. Speaking of Bitcoin, it would behoove us to understand and to be able to talk about what is going on with Bitcoin. Are they going to, ban it like some of the folks are saying, of like, oh, giant regulations coming in, they're shutting it down, get out, get out, get out? Or is it going to really do wonders? And that brings me to this fine gentleman over here. This is Max Kaiser. I'm sure that you know of him if you have been in any way, shape, or form paying attention to any YouTube stuff, any Bitcoin stuff, or even if you're watching RT, some of the shows. I know it's a Russian television, and people are like, it's Russia, it's Russia. Stay away from me, you devil. But it's good TV. They really actually have excellent shows. I will also tell you Al Jazeera again. Oh, yeah, folks, it's in English. Number one, you don't need translation. Number two, they actually really do have good shows. So I think it behooves us, all of us, to actually expand our thinking and look at things outside of just what we're getting fed within our local environment. Because when you're able to get it from different areas, you're able to expand your mindset and start creating your own thoughts as opposed to just relying on what the talking head on the TV says. So Max Kaiser basically was doing a Bloomberg report, and he basically was talking about Bitcoin started facing regulatory scrutiny. Is it going to happen? It's not. And he basically stepped in and said, no. Max Kaiser is noting that there's nothing to fear when it comes to Bitcoin and the regulatory scrutiny towards Bitcoin. He believes that Bitcoin is far from regulators' reach because most of the regulators from different countries are already defecting to Bitcoin because it's achieved escape velocity from the regulators. Here is the quote of what he actually said to the Express UK. Bitcoin has achieved escape velocity from regulators. There's literally nothing they can do to stop it that doesn't require them to print more fiat money, which only makes demand for Bitcoin and price go higher. And of course, we already know they are doing that. They are printing more. They're going to continue to print more. We are already seeing defections. Regulators in various countries are defecting to Bitcoin. It's like the fall of Soviet Union in 1991, except this time it's the fall of the global central banks. Bitcoin is playing 4D chess. Regulators are playing checkers. So that's kind of coming from him. Now, one of the things that is also coming in is the rally to $35,000. And of course, we do know that we've come over many different hurdles. We're going to be taking a look at a price in just a moment. But Max Kaiser said that the Bitcoin rally is yet not over and it could surge to 35,000 in the short term based on its rising hash rate. Of course, in the recent interview that you can probably find on YouTube very easily, Max Kaiser basically said, quote, what Michael Saylor and possibly Elon Musk and others have figured out is that they have the Federal Reserve Bank and other central banks in a very precarious position. This is because these banks have artificially pushed interest rates down to these extraordinary low levels to almost zero. If they can borrow cheap and buy Bitcoin, they're in a position to make a speculator attack on the Federal Reserve. Make no mistake about this. Michael Saylor and the other Bitcoiners are attacking the Federal Reserve and the global central banking system. This is why we could see Bitcoin trade at $200,000 or $300,000 pretty quickly. So this is one of the things that he was talking about and sharing. I don't know if we're going to get to 300. I think we are. I actually think that Raul Paul, who said it's going to be million, is probably right. I actually think it's going to be more than a million per Bitcoin, which I know it sounds really crazy right now, but I'm sure it also sounded crazy to folks, a few years back when Bitcoin was trading at $1 or a penny to say it's going to be 26 to $28,000. Yet here we are. Here we are today, right? So don't discount crazy. Don't discount crazy is what I'm saying. All right, let's take a look at the markets. Let's refresh so we get the freshest option out there. Oh no, 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 come back. All right, here we go. So here we go where we are. Well, Bitcoin is currently trading at $26,941, slightly down for the day, but it has done enormously well. Ethereum is sitting pretty at $730.51. It has pumped quite a bit over the last few days, and it's slightly up at just under 1%. Tether is Tether. XRP is dumping like crazy. And if you haven't heard the news, if you're still in XRP, I don't know that it's time to buy. I think it's time to get out as fast as you possibly can if you haven't already. Right now it's trading at 19 cents, 19.687 cents. Let's be accurate of where we are. It has dumped a great deal. And of course, what I'm saying here is not a financial advice, but I'm just looking at it saying everybody is pausing the trading. Everybody's delisting it. Coinbase just announced that they're basically going to pause trading in January. So it's like giving folks time to actually get the heck out. So it would almost like behoove you to do something with it if you're holding it. Litecoin slightly down 4.4%. Bitcoin Cash slightly down 4.4%. So Polkadot and Cardano have actually pumped incredibly well. Polkadot is up 14.4%. Cardano up 16.4%. If we take a look at the biggest gainers over for the 24 hours, we do have some insane gains happening in the DSD, the dynamic set dollar. is pumped, actually 120.9%. Now, this one, DSD, is actually very interesting because what is going on, they're trying to dynamically set the dollar and trade it. And the unfortunate piece is that the algorithm is still trying to figure out its foothold, or it wasn't set correctly to begin with. So there's massive fluctuations and stuff within it, where at one point it was like $4 and now it's like 0.89. So just be very careful. It's super super volatile, which means that if you're a trader and you know what you do, you can make mad amount of money with that one. Ren is up 20.3%, Chili's 18.7, Cardano 16.4, Polkadot 14.4, VeChain 11.2, Celsius Network 11%, Loopring 8.9, Blockstack 8.4, Binance Coin 8.3, Swissborg 8.1. So it keeps on kind of going down. As you can see, we do have some pretty healthy gains. On the losing end of things, we of course have some healthy losers as well. Biggest one being XRP, losing 33.3% in 24-hour period. Sia Coin is the next one at negative 11.2. The graph is negative 10.6. Stellar negative 8.9. Empty set dollar negative 8.5. Digibyte negative 7. And then we go into the sixes and the fives and so on. So not a whole lot losers, not a whole lot of gainers, but predominantly has been a big on the end. On the traditional markets, I think it would behoove us to take a look. If we take a look at major indices in the US, the Dow is actually slightly up. It closed yesterday, so it hasn't opened yet today at 30,404. And the looking at the futures market, I am seeing green, so there's a potential that we're going to be seeing green today as well. And of course, we do know every time they propose a new bill, they print more money. The more money comes in, the traders and investors basically just pile on, and the prices go up. Volatility, of course, is down and dropping down like a rock. Currently, volatility in S&P 500 is 21.3. I remember when it was like 3,400. So that should tell you how far we've come. And Russell 1000 is slightly up. 0.61%. Nasdaq 0.74 up. NYSE Composite up 0.16, Russell 2000 up. So we are seeing a lot of things up. On the major stuff, we are seeing basically European, Japanese, Hong Kong, everything is on the up. Everything is truly trading on the up. And on the currency component, we're seeing that the dollar actually is come down slightly, currently at 90.031. Now it's 0.32. As you can see, it keeps on changing. We're seeing euro, British pound, Swiss franc, Japanese yen, and Canadian dollar all basically going on up. US dollar is definitely trading on down. This gives us another reason as to why the cryptos are incredibly good and why it might make sense. One of the things that I think is also important to do is to take a look at one of the final articles of the day, and that is a crypto analyst, Tyler Swoop, which is Chico Crypto channel, right? So if you're not watching that, you probably should. You probably should. The guy knows what he's talking about and does a really good investigative journalism. I really actually enjoy it. So you should check it out if you don't already. Crypto analyst says 10 airdrops could dwarf $1 billion launch on Uniswap. And of course, what did he say? Well, he is saying there's going to be free money being issued out. The first on his list is decentralized margin trading platform DYDX. So he believes that they are going to be rolling things out for individuals who have used the platform. The second one is Furucombo. If you haven't used Furucombo, it's basically a combination protocol, so you can do a lot of things in one step with the DeFi. If you want to basically use the flash loans to go in and do stuff or deposit or stake or pool or whatever, it makes it super easy to do. I mean, you literally just grab and move the box and stuff, and you can do some of the smart contracts without having to write smart contracts and do it pretty quickly. It's actually a pretty cool site if you haven't used it. So they are the ones that also he expects could be rolling out token. Zapper is an aggregation tool, manage a lot of your DeFi assets and liabilities in one simple interface. MetaMask is a fourth one on the list. MetaMask actually just introduced MetaMask swaps, and it's basically their own aggregation tool. So if you do a little bit of swap, who knows, you might get a token if and when they roll one out, and he believes it's going to be a big one. Paraswap is an automated market maker, liquidated aggregator similar to 1inch. And Polymarket is another one, which is an informative markets platform that lets people bet on hotly debated topics. Catnip, a community powered prediction market, which is an exchange built on Augur. So, something for you to know. Number 8 is DeFi Saver, which bills itself as the one stop management app for decentralized finance. Foundation.app, which it says in an automated market maker protocol for limited items, which is built on XDAI. And in the 10th swap, it's Dark Forest, which is a popular game. It's a real-time strategy game, and he believes that if they were to do a money drop or the coin drop, well, it's going to be a giant one. Now, of course, we are going to be taking a look in the future, of course, taking a look at what's going on. We're probably not going to be streaming all of this week because, unlike most of the folks here in the United States, New Year's is a big deal for me. So I'm not going to be doing a show on the 31st or the 1st or the 2nd or the 3rd because, well, I know that's a lot of dates, but when we celebrate, our celebrations last a few days, and I like to keep with the tradition. So I like to celebrate for a very, very long time when it comes to New Year's because that is a huge deal for me and the place where I come from. So I'm going to give you a bit of a tip of what we're going to be talking about tomorrow. And this particular article is what we're going to be discussing about. Of course, we're going to be talking about real estates tomorrow. Estonian prop tech company Renden raises 1.2 million seed for its long-term rental platform. So Renden is an Estonian property technology startup, prop tech, that wants to improve the home rental experience, including offering a no deposit feature. So they raised about 1.2 million euros, not dollars, million euros in seed funding, and they are operating a long-term rental platform that promises to smooth out the process between landlords and tenants. Its headline features is an insurance-backed solution that means no deposit is required from tenants. So what they're doing, this is actually kind of interesting and cool, and they're not the only ones out there doing it. There are many companies starting to roll out. I think that this is a new movement in the technology, in the rental market space, that we're seeing, the tours happening online, the leases are going to be signed online, and they want to be part of it. So what they're basically saying is that you don't have to put in, $1,000, say the $1,000 rent, so $1,000 first month, $1,000 last month, $1,000 security. You're like, that's one too many $1,000, Nev. I can't pay all that, right? Well, we understand. So that's what they're basically saying is that you don't do that. They partnered out with an insurance company that basically says that, hey, if you go in and you use our service, then, this is the insurance company that is going to pay in case something happens. They walk out, they break things, whatever. The insurance company actually ends up taking care of that stuff. You don't have to worry about it. So how do they make money? Well, they do take a fee of 2.5% of the monthly rent, and it can be paid by the tenant or by the landlord. And what they're seeing is that more and more landlords are choosing to pay the fee themselves, as it helps them find the tenants really much faster. So this is one of the cool things that I thought was pretty awesome that I wanted to share with you of what is happening in the world of rental and tech and everything else. Tomorrow, we're going to be, of course, taking a look at the news. If something major happens with cryptos, of course, we're going to cover it. Hello, why wouldn't I? I want to know when it happens, but we're also going to be taking a look at what's going on in the world of real estate, so stay tuned for that. So if you're liking the show, smash the like button, subscribe to the channel, hit notification, and I will see you tomorrow. Until then, stay forever money blessed, and do remember, you are only one deal away.